morning. You're watching Business World Live. I'm Danie Laurel. It's 10:30 a.m. this Wednesday morning here in Manila. We are about 1 hour into this trading day. Let's kick off with our top story. The Senate has approved on third and final reading the Bayanihan II bill, which is touted as part of the government's COVID-19 relief plan. The chamber voted 22 to 1 to pass Bayanihan to Recover as One Act, which gives certain powers to President Duterte to deal with the health crisis and earmarks 140 billion pesos for recovery efforts. The passage comes just a day after President Duterte delivered his penultimate SONA, where he called on Congress to pass the bill and other measures meant to help the economy get back on its feet. Opposition Senator Francis Pangilinan was the lone dissenter, citing the supposed rampant corruption inside the DOH as one of the reasons why he thumbed down the bill. He also pointed out what he described as mediocre leadership, saying that the government has failed to contain the virus nearly 5 months since the implementation of the Luzon-wide lockdown in mid-March. As of July 28, Tuesday, the country has so far logged 83,673 COVID-19 cases, 26,400 have recovered, while 1,947 people have died. The Senate's approval ends deliberations between the legislative and executive branches over the amount of the stimulus program. Finance Chief Sonny Dominguez has been insisting on lowering the amount of Bayanihan II from the Senate's original version amounting to 236 billion pesos to 140 billion pesos over fears that more spending would inflate an already record budget deficit. Senate President Pro Tempore Ralph Recto said the bill is a product of compromise with a veto-threatening executive. Under the bill, the president's power to realign funds within the 4.1 trillion peso budget is extended until September 30. The realignment should be approved by Congress. The bill also allots 140 billion in new allotments, which seeks to fund existing aid programs as well as fresh capitalization to state-run banks so that they can lend out to businesses battered by the pandemic. The counterpart measure already hurdled the lower house last June. Majority Leader Martin Romualdez says House members will decide whether they will adopt the Senate version once they see the version approved by the senators. Now, remittances to the country may fall by as much as 10% this year as source countries further have economic hits from the pandemic. This is according to Moody's Investors Services. The credit rater said the diverse employment of OFWs will make inflows more resilient compared to the 20% drop seen by the World Bank for global remittance inflows this year. Moody's noted that some of the jobs OFWs are in belong to the healthcare sector and are less susceptible to job losses or wage cuts. Remittance inflows for the first 4 months of the year slipped by 3% to $9.4 billion. Moody's sees remittances into the country likely reaching a trough in the second quarter. The large drop in global remittances may also hurt consumption in the country. The debt watcher said this may also further widen our current account deficit and drag global economy by 1 to 7% this year. The Bangko Sentral, meanwhile, expects a 5% decline in remittances to the Philippines this year. That's higher than its previous forecast. Going to kick off the markets with a quick health check on our local currency, the Philippine peso, which is trading now at 49.228 to the greenback. This is actually a little bit of a depreciation, so 0.030 weaker, let's say, than it was right after the SONA, just after the president had its SONA, and he pushed, of course, his President Duterte pushed for corporate tax cuts and targeted support for the pandemic hit industries. The Philippine peso had actually advanced to its strongest since November 2016, but nevertheless, we are still rather strong. And if you take a look at how we are performing compared to the rest of the region, you can see that the Philippine peso, compared to all the other currencies, at least in Asia, is actually the second best performer compared to the Japanese yen. So nevertheless, we are still in the strongest among the rest of Asia. Now, I do want to take a quick peek before we move on to the equity space towards the virus update and just take a look at how we are actually doing, not just here in the Philippines, but also globally. So I'm just going to take that out for you, guys, here, as of course we are awaiting nevertheless the decision on whether or not we will be remaining in this GCQ, or whether we will be going back to MECQ, as our cases here in the Philippines soar above 80,000 already. Now, I just want to take a quick peek here at how we are performing compared to the rest of the world. You can see on my terminal here, the worldwide cases are hitting net changes of 0.238 million. So that's 238,000 net change cases, so new cases globally. Whereas the amount of deaths have recoveries have actually also slowed down to 0.170 million, so 170,000 recoveries compared to 238,000 changes. Now you can see on the chart here as well, this is of course the Bloomberg data, citing as well Johns Hopkins University data, that in terms of the Philippines, we have yet to see any trend of a flattening. You can see on the right part of my terminal here that the cases have just been moving sideways here, and as we already mentioned, we had 1,633. That's a new net change in cases, and the recoveries are 171. So definitely still varying from day to day if you take a look from the June towards July, with some spikes nevertheless in the amount of cases. Now, based on this, of course, we have a lot of news here on whether or not the government is going to be reopening the economy more. One such development that we just received over 10 minutes ago, and this, of course, is a report from the Philippine Star, which cites a DZMM interview, radio interview with DTI Secretary Mon Lopez. They're now saying that the Philippines Task Force on Coronavirus has now approved the reopening of gyms, internet shops, tutorial and review centers, as well as drive-in cinemas under the GCQ beginning August 1. So this has been something that we had already been noting that Trade Secretary Ramon Lopez was pushing for. He had actually asked for them to be operating at 30% capacity. Now, under current rules, you've only got barbershop, salons, dine-in restaurants up to 50% in GCQ and up to 75% in the modified GCQ. And now that you're going to be adding tutorial centers and gyms and drive-in cinemas towards this mix. And DTI Secretary Ramon Lopez has been rather vocal about the fact that he does not want us to revert towards a stricter lockdown. He says that local government units can actually isolate the lockdowns if necessary. Now, let's move on to some global stocks and see how the rest of the world is doing. I just want you guys to have a look at the terminal and take a look that the stocks over in the US are a bit on the downtrend, at least last night and overnight trading. And Asia stocks are also opening mixed. Now, a very big decision to be coming out in the United States today. That is Wednesday. That is the Fed. They will be having a conclusion on the policy meeting. Meanwhile, they had already yesterday extended most of the emergency lending that it's had for 3 months. So that's until the remainder of 2020. They're set to announce a rate decision. Most analysts are expecting no significant policy changes, but they are waiting for Jerome Powell and his team to actually take the opportunity to make some announcements and formalize the forward guidance. This is according to Bloomberg Economics. Another big thing to be watching out for offshore tomorrow brings a lot of big earnings reports. You've got Apple, Amazon, Google, L'Oreal, Samsung. You've also got the United States' second quarter GDP coming in tomorrow. And you've also got China PMI data coming in on Friday. And if you take a quick peek at Asia Pacific and how we are trading, as I mentioned, a bit mixed on the back foot. You've got Japan in the red, but you do see China and Hong Kong actually posting some gains here. So it's a very mixed bag here, with Singapore also down by 0.2%. So a very, very mixed picture here. Hong Kong will also be reporting their second quarter GDP. That's today at 4:30 p.m. So a lot hinging upon how Asia is performing. Let's move on to our domestic markets and our index. I had been checking this earlier on. We had actually rebounded yesterday. Okay, so we had last minute bargain hunting yesterday despite a very weak trading day that opened on the back foot, but it doesn't seem to be extending towards today. You're seeing us down by 0.8% to 5882.47. So we haven't returned to the 6,000 levels. A lot of analysts have said that the sell-off towards the early part of yesterday's trading was really a reaction towards the sauna and a lack of, let's say, a detailed plan on addressing the COVID-19 pandemic. This is according to Jafet Tantiangco of PhilStocks. There's also still worries, of course, on the tally of coronavirus cases and whether that will have an impact on the month's end and what's going to be happening, especially in the capital. But he did say this, according to PhilStocks, that the drop in prices earlier in the trading day yesterday made it attractive enough to offset the intraday losses. And in fact, investors had pulled that out, and Bloomberg did mention, we had a 5-day slump. We were down by 5%, and investors saw some opportunity to bargain hunt. Now, I just want to weigh in on one sector that is, of course, has been on the spotlight, and that is the telco space, because that is still bearing the brunt of President Duterte's speech. We did mention that yesterday shares in Globe and PLDT dropped by as much as 3.5%, basically, for both of them. And you had also Dito Telecom surging by more than 6%. In fact, it reached 8% at one point. And just a quick peek shows us that PLDT is still down by 1.7% this morning. Globe has recovered a little bit. That's up by 0.4%. And Dito is paring back those gains. That is down by 2.2%. Now, what are analysts saying? Well, we already mentioned yesterday that Globe had released a statement. PLDT declined to comment, but you've got Adel Tamano rather, of Dito Telecommunity, saying that the concerns of the president will actually help, for the need to provide world-class connectivity to the Philippine people. And he said that Dito is on track to meet the commercial rollout targets, which are slated for March 2021. Now, what is this going to mean for the stock market? Antonio Ligon, he is a law and business professor at DLSU. He says that the president's statements may actually force the two incumbents to improve their services, but he does warn that the threatening part is not good, because investors that might want to participate and become telco players might start not being interested anymore because of fear that the president might also be doing the same thing to them. So this may actually be dragging both PLDT and Globe, this according to Rachel Cruz of AP Securities. But she did mention that because they are both ramping up infrastructure, an opportunity might be there. So if they do drop, that might actually be time to accumulate the stock. So very interesting. And one thing I want to be checking out for here is also the Ayala companies as their energy unit. So that is, of course, AC Energy is saying that they will be investing 2.2 billion pesos to two of its renewable energy units. So that's in part of the earlier commitments. They have been very vocal about boosting investments in new energy technology. So this 2.2 billion to be going into Bataan Solar Energy and Giga Ace for development. So they'll be undertaking project studies and installing new equipment. However, you're going to be seeing AC down attached together with the local board is down 1.5%, together with AC Energy, actually, which is trading down by 1.5%. And finally, very quick peek on the airline industry, especially as you've got more and more positivity, let's say, in terms of resuming flights. Cebu Pacific now saying they will be resuming flights from Manila to Seoul in South Korea starting August 6th. But passengers will not be allowed to travel from Seoul to the Philippines. It's just going to be one way. They've also set Manila-Dubai and the returning Dubai-Manila flights every Sunday and Monday, respectively. So a bit of some bright spots there. Cebu Pacific actually bucking the sell-off in this morning's trade in the index. That's up by 0.4%, trading at 37 pesos and 30 centavos. So more markets later on in the broadcast with AAA Equities' Chris Mangun. Meanwhile, let's check in on other headlines we are watching. In the middle of the week, the Budget Department plans to submit the proposed 4.5 trillion peso budget for 2021 to the executive branch this week. The DBM budget proposal needs to be cleared with the cabinet before being submitted to Congress for deliberations. The constitutionally mandated deadline for submission to Congress is set at August 26. This is 30 days after the State of the Nation address. The DBM says the Development Budget Coordination Committee, which is composed of at least 3 cabinet secretaries, has approved the 2021 budget proposal. Meanwhile, economic managers are in the process of revisiting macroeconomic targets and forecasts ahead of the submission of the proposed 2021 national budget. In a mobile phone message to Bloomberg, Finance Chief Sonny Dominguez said a revision to the 2 to 3.4% GDP contraction forecast for 2020 is currently being discussed. The National Electrification Administration cut its target for rural villages it plans to deliver power to this year. That's as their funding was diverted to the COVID-19 response. From over 960 initially, NEA revised its target to only 635 sitios that will receive power supply by the year end. NEA earlier said that electric cooperatives have brought electricity to 181 more rural villages, that's mostly in Luzon, in the first half of the year. The government aims to fully electrify all households by 2022, but NEA said the overall timeline has been affected by the pandemic. The agency's head of total electrification and renewable energy development said the goal can still be achieved if the funds come as scheduled. Another NEA official said that for 2021, the DBM has recommended a budget of 1.8 billion pesos for the agency. The requested budget is 10.8 billion. Using 2015 numbers, NEA said it delivered power to about 96% of the total 14.3 million households by February. That means some 1.8 million families are still left without electricity. The Anti-Red Tape Authority is forming a task force that will monitor the compliance of local governments and expediting the permit process for building new common cell towers. 9 government agencies have signed a memorandum circular streamlining requirements for securing permits, licenses, and clearances to build such towers. ARTA noted that LGUs are reported to be notorious in imposing burdensome requirements or huge fees on telco firms, which delayed numerous tower projects across the country. Under the new rules, the government plans to reduce the processing time to 16 days from the previous average of 8 months. It also plans to reduce the number of required documents from 86 to 35. ARTA said changes can be filed if particular government officials or employees cause delays despite the new guidelines. Earnings season for the second quarter has been in full swing and is expected to be one of the worst on record. How have we fared so far? Now, here to chat about that and other buying opportunities, we have with us AAA Equities' Chris Mangun. Good morning, Chris, and welcome to the broadcast. Okay, we're trying to get Chris on the air. Chris, are you there? There you are. Hi, can we do a quick sound check? Hear
Hello?
me? Yes. Hi, Chris. Good morning.
Hello?
Yes, can you hear me?
Hello.
Okay, perfect. So
Hi,
I
Danie.
want to kick out, of course.
Good morning.
Hi, Chris. Okay, there's a bit of a lag, but I think we can go ahead. I wanted to kick off on the investor sentiment in terms of the markets just after the president's sauna. The bourse has been sitting below 6,000 levels now, even ahead of the sauna. Is this all sentiment driven? Is this about earnings coming out? Does that have anything to do with the president's statements whatsoever or the coronavirus issue here in the country?
Hello. Hello. It's choppy, Danie. Hello.
Hi, yes.
Hello.
Yes, okay. I think I hear a bit of a lag. Would you like to reconnect? Let's take a quick check with my producers.
Hello?
Okay, I think we're gonna be
Hello?
reconnecting with Chris later on. Yes. Okay.
Wala akong naririnig.
Okay, let's do a quick peek on how our markets are doing first of all while Chris reconnects his Chris. Okay, there. Okay, let's do a very quick check on how our sectors are doing. As we try and get Chris Mangun back on the stream, let's open my terminal together with me, guys, if you will. I'm gonna take a quick peek at how our sectors are actually performing. We've seen it a little bit mixed over time, and you can still see it very, very mixed. Interestingly, you've got mining and oil surging by 4.1% earlier today, and industrials as well and financials in the green, but you've still got a very mixed picture. You've got holding firms, for instance, slumping by 1%, property and services as well. Now, it's very interesting to note that financials were one of the ones most heavily sold off this week. That's as, of course, you've got the biggest lender, BDO, coming out with their earnings. That was actually the first net loss that they had seen in over a decade. Now, I just want to take a quick peek at how our stocks are performing year to date. Now, what I want to show you in this chart, and this is, of course, our top performers and worst performers of the year to date, is the fact that first gen has now moved up towards the gainers. So you've got three gainers here: Pure Gold, BLDT, which is still up by 32% year to date. That's despite, of course, the sell-off that we had seen the past couple of days during the after the speech of President Duterte. But take a look at Globe Telecom. Globe has actually now joined the ranks of those in the red year to date. That's down by 0.9%, despite the fact that during the entire year to date, it had actually been one of the best performers as well, together with PLDT and Pure Gold. So again, first gen now surpassing Globe Telecom in terms of the top three players. Now, another one that I want to highlight is Aboitiz Equity. That had also released their earnings recently, yesterday actually, and that is still down by 5.6%. But compared to the rest of the local boards, which is, by the way, in pain and down by 25%, it's still not a bad showing. It's actually the top fifth best performer. Ayala Corporation, which I had just reported on, is still very much investing in its renewable energy unit, AC Energy, also one of the top performers here, down by 9.5%. But nevertheless, I did mention mining and oil. Semirara, the worst performer in terms of stock, that is down by 54%. So having that in just the first year of trade. Let's try and take a quick peek at whether our guest here is back. I don't think he's back yet. He's still reconnecting. But if I did mention Samirari, the worst performer of the year, has actually been the best performer today. So it's up by 3.9%. And that is followed by LTG, which is up by 2%, and URC 1.5%. Jollibee as well. So these are actually consumer-related stocks. You've got LTG, of course, in tobacco, URC as well, very much in consumer linked, and Jollibee Foods. We have yet to receive the second quarter guidance on that. On those specific stocks. And you've got the MCI, which is, of course, one of the parent companies of Semirara, also in the green today, up by 0.6%. One thing to be watching out for is Meralco, because that has been in the red this morning. That is down by 2.5%. We had actually, reported their earnings just yesterday, and they had actually also we hadn't reported their earnings, but we actually said that they will be seeing a lower core profit amid a slow recovery in this 2020. Chris, are you back with us? Chris, I think you need to unmute your microphone. Not sure. Let's give you a couple of minutes. Chris, can you unmute? Okay.
Hello, Dan.
There you go.
I can hear you.
Okay. Are you good? Are you good? Okay. I think
Yep,
we,
that's
yeah,
better.
perfect.
Fine.
Okay, that's better. Sorry for that. So we hope we're going to have you here. We've just got 5 minutes left on the broadcast. I just wanted to do a very quick check on what the market sentiment is right after President Duterte's SONA. We're still sitting below 6,000 levels. We did recover yesterday. But the recovery hasn't been enough to spur us above 6,000. How are you feeling right now?
Yeah, I think optimism was limited yesterday. I think investors were expecting more from the president's speech. Most were calling for a complete roadmap of our economic recovery. And I think investors failed to see that, and that's why optimism was limited. I think investors really saw a substantial rally at the beginning of June when quarantine restrictions were lightened. But unfortunately, consumer spending has not uh, as much as what was expected. And that's why investors are really hello.
Yes, go ahead, Chris. We can hear you. Okay, so I think we're having difficulty catching you, Chris. We'll try and get back to you. Yes. Yes. Sorry, Chris, we can't really hear you. So I'm going to have to check in on the markets now. But as Chris was saying, there was a lot of rallying going on, but the sentiment was not enough to pull us back above the 6,000 levels
Danie?
here. Yes. Are you back? Okay. Yeah, Chris, I think we're gonna have to yes. Okay, we're gonna have to get back to you later on. Okay. So that's very unfortunate because we really would have wanted to have his opinion on that, especially since we were about to talk about the number of signups in the AAA Equities platform. But nevertheless, I just want to do a very quick peek at how our local bourse is doing before we end this broadcast. The index still sitting below 6,000 levels here. I just want to take a very quick check on our PE ratios here, which of course have been recovering already since the March 19 low. And you could see this V shape here recovery, right? So that was actually already sinking to 11.3 times. It's probably one of the lowest we've seen in the past 3 or 4 years. That had gone back up above 16 times forward PE ratios, but we are now at 15 times. So a lot of analysts have put in their weight here, saying that we are still, on the one hand, still very expensive compared to the rest of Asia, but also some saying that because of the fact that the central bank still has room to maneuver, we might actually still see benefits. But we do have a lot of earnings coming out, and so far, as I mentioned, the financials had been in focus because of the loan loss provision. So a lot of negative earnings there, especially net losses from BPI, BDO, and even Union Bank in terms of loan provisions, and still they did mention that they're hoping for a better recovery in the third quarter. So we'll be checking in on the markets tomorrow again, and hopefully get Chris back on the broadcast. So for now, again, we're trading in the red, hoping for a recovery there as we end this midweek. And that's the first look into the business day. Today is July 29, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.